You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel Elcon, and I'm joined by Jerremy Newsome. He's the CEO of RealLifeTrading.com. Jerremy, thanks for joining us on this Tuesday morning.
You're absolutely welcome. Thanks for having me. I'm really excited to be just meeting you today. That's pretty wild and exciting.
We're switching things up a little bit while Joel is out of the country. So first,
Sure.
let's just kind of get your take on the overall market right now. We're at the forefront of earnings season, and a lot of people are just kind of sitting, waiting to see what these companies will come out with. What are you watching?
The overall market, that's a really good question. I am kind of bearish for the next 2 or 3 weeks, maybe to the end through October. I mean, the SPY is at a really strong resistance, that 202 price range, and everybody was watching it. And it looks like we're kind of failing it today. We're gapping down just a little bit. So I'm actually slightly bearish up at this price, this level, and I kind of do expect, even if it's a small pullback, I expect we get one this week, next week. But there's so many similarities, Brianna, to 2011. We had that drop, and then everyone was going, upset and scared about the head and shoulders. And then November came around, right after Thanksgiving, and the market was up huge and just took off and never looked back. I think there's a very valid chance that could happen again. And unless we start breaking some of those supports on the SPY, the general market, I'm actually still long-term bullish unless we get below those prices. So there's just so many similarities between what we're doing now and 2011, and one of those similarities is the exact same time frame. I mean, it's happening almost to the week, so that's why if the things are shaping up the way they were, we're going to have a little bit of a sell-off this week, maybe next as well.
Oh, it's an interesting point. I like how you related it back to 2011. So we'll definitely have to keep an eye out for that time frame this
For
year.
sure.
So we already got one of our big dogs out of earnings season, Johnson & Johnson. Did you take a look at that this morning at all?
I did take a look at Johnson & Johnson. Yeah, big J&J. I like it. The gap, is for me, I'm purely a technical trader in regards to gaps, and I am day trading most of the time in regards to looking at what the gap is doing and how many people are affected by the gap. I think it's affected with an A, right? Grammatically affected by the gap. And 94.24 is kind of where it's at pre-market, I believe. And it's slightly bearish, but really Johnson & Johnson's been trading pretty sideways for a while. So my thought is, depending on the end of the day, if we get a big, nice bearish candle, I'm going to be slightly more bearish on Johnson & Johnson. But, not that many active traders that I know really trade Johnson & Johnson because the options, it's such a blue chip. It's such a blue chip stock.
Right.
You buy in a hole and you just do that on Johnson & Johnson. But if we close at any point above 96.52, that's kind of, I think, everybody's line in the sand to be a little bit more bullish on Johnson & Johnson.
Another blue chip stock we're going to see earnings from today, Intel. Have you been following that at all? It's showing up on your radar.
Yeah, it has totally been showing up on my radar. Yeah, I have like a fall portfolio. Every season I try to create a portfolio of 5 stocks I'm going to kind of keep an eye on. And Intel, I'm actually going to buy whatever pullback Intel gives me. And I'm hoping it gives me a pullback down to $30, $30 or $31, somewhere between that range. If we get down there, I'll look to buy because it looks like there's a chart pattern out there called inverted head and shoulders, and it's making one perfectly. So my main question is, if that chart pattern is going to play out, it's one of those almost self-fulfilling prophecy things at this point that if you get the chart pattern and everyone plays it the same way, then sometimes it works. And I'm actually slightly bullish on Intel. Believe it or not, I don't think fundamentally or innovationally they're a strong company at all. They could shock and surprise the world. I don't know, but I don't see a lot of amazing things coming out with Intel recently. But a pullback to 30, I'd be bullish up until about 35.29. So inverted head and shoulders on Intel. I'm buying a pullback if it can give me one.
All right. Oh, well, we're going to start to get some of our financial earnings. Not this afternoon. Yes, this afternoon we're going to get a report from J.P. Morgan. Do you follow the big banks at all?
Mr. Morgan. JP. Yeah, I do follow them on Fridays. I have Finance Fridays, so I look at all the the financial sector, the banks, things like that. And I'm interested to see what JP Morgan does. Really interested. I think if it opens below 58, there's going to be a lot of shakeups in the financials. So, if financials gap down, I think that could almost be the cannon fodder to create that little selling pressure that everyone's kind of been looking for in the market. Again, I don't know how strong it's going to be, but if the financials gap down hard, that's going to be some gasoline to the fire. And if they gap up, there's going to be a lot of people who are bearish out there in the markets and who are going to be a little bit upset and probably trying to buy the cover depending on how big the gap is. And that could also cause a perpetual higher move. So I think financials really could lead what we see upcoming in the next few weeks in the market, maybe the next few months, because again, a strong earnings announcement from financials and a strong earnings announcement from techs, like the Google's, Apple's, Netflix is coming up soon. I think that could be a reason to go higher. That's why I'm just not totally sold on this bearish market. Everyone wants this market to roll over, like everybody.
Yeah, absolutely.
So when everyone wants the market to do something, that's usually the exact thing it does not do. So that's what I'm just kind of basing my analysis on in a way.
Okay. Well, one of those big tech companies that everyone's going to have their eyes on, Netflix. We're going to get their report tomorrow. What's your outlook on Netflix right now?
Netflix slowly taking over the world. Great shows. Have you seen good new shows, Rihanna?
Oh my gosh, I watched like old and new shows. I got on a really long Battlestar Galactica kick with Netflix, but then they took it off and it like ruined my life. So I was a little mad at Netflix for a while. But yeah.
To the Battlestar.
Yeah,
okay.
yeah. A little bit of sci-fi. But yeah,
very valid.
Great content, enormous amounts of content. I was just talking with our co-host earlier on the show that Netflix, I think, really buys into the sharing economy of millennials, and like you only get what you want when you want it. You don't pay for all these like 5,000 freaking cable channels that you never even watch. So, I mean, fundamentally, I love Netflix.
Boom. I think you're spot on. And it's really interesting that you say that, because what a society shift we've had, right? 30, 40 years ago, you had 3 channels, 2 channels, and everyone's like, I love these. And then DirecTV came out, like, you can have as many channels as you want. Everyone's like, yeah. And so everyone hops on the cable satellite thing, where you get, the more channels, the better. And now we're like, I don't need this many channels, bro. 3 or 4.
I can't afford to pay for all these channels I don't need. It's like,
you're
what
right.
is
You're
this?
totally right. Yeah.
Nonsense.
That's how us millennials are, if you could call it that. And we're huge Netflixers, and I think Netflix is very bullish long term. I think if it does gap down, people are going to buy it. As long as it stays above 80, I think it's a viable gap. And pretty much, if it gaps down, if it gaps up, I'm going to be a little hesitant. I'm going to wait for a little bit of a pullback because I want to buy low, sell high. Because literally, if Netflix gaps up, to be honest, it's going to be an all-time high again. Like, again. It's always at an all-time high.
Right.
Like, come on.
Yeah.
Pull back. Yeah, I think you're spot on. I think that was a really, really good analysis long-term on Netflix. I think you're totally right. I mean, cable companies, one of the few companies out there that I don't necessarily see how they're going to still be around in 15 years.
Mm-hmm. Yep, absolutely. I'm on the same page. Another tech company that's just been all over the place lately, Twitter. I mean, we got the official confirmation for Jack Dorsey as CEO last week. There was the announcement that they were doing those layoffs last week, but then we had a little bit more of that this morning, as well as some guidance. So already we've had some pretty interesting trading action in Twitter today.
Yeah, you're right. We really have. We were down almost 7% yesterday. On a technical side, we formed a candlestick pattern called an evening star reversal. So if we break the low of yesterday, we should slightly be a little bit bearish. But longer term, I'm taking a little bit of a weird approach because I'm actually normally perma bear on Twitter because they're not making money.
Yeah.
I'm not really into the companies that don't make money. But Twitter is forming, in my opinion, a pretty nice sized double bottom. And this recent weekly action closed above the neckline, and this little pullback that we got yesterday retested the neckline. So this gap up today actually is kind of bullish, and I'll be watching it for the next few days, few weeks, bullish. And then, like you mentioned, earnings coming up. Anytime Twitter gaps up on earnings, I'm just like, what earnings? You're just happy that they didn't lose as much money. All right, cool. So
yeah,
if if it does gap up, that'll be huge. I will say that. If Netflix can gap out of this, accumulation phase that we have done here, people will be pretty bullish about it. It isn't a buy low, sell high scenario. And, Twitter's not going to go anywhere for a while. It just needs a little bit of innovation and needs some profit.
Yeah, absolutely. I mean, you're totally right about how they'll gap up on earnings. It's like people don't even care about the profitability of the company. They're always looking at that
Mm-hmm.
MAU, that monthly active users number, and it's like, for me, I mean, I love Twitter. I use it every day. I think there's a lot of potential there, but I'm stumped as to how they're stumped on figuring out revenue. So I'm
Yeah, well,
kind of in
you've
the
never
same
bought
little
anything off of
bearish.
Twitter,
I
have
used
you?
to be super bullish on Twitter too, and then I've ever since the whole CEO debacle and just cannot seem to get their vision for growing profit in line. I've kind of turned around a little bit on the stocks. So.
Yeah, I agree. I mean, have you ever bought anything off of Twitter, like from an advertisement?
No, but I'm not much not really. I'm more of a conviction online buyer, so I won't
Sure.
randomly be like, oh, I want this. Like if it's like I'm looking for something, I'll go shopping for it online. But that's just a
Totally.
personal
Yeah, yeah,
preference.
and Google knows when you're ready to go shopping.
Yeah, it
But
does. It totally
yeah,
does. Google's got the
yeah.
algorithms down pat. But
Oh, they know. They know.
moving on, you had mentioned you were watching Ryder this morning, and I think they had come out with some lower guidance.
Yeah, exactly. So Ryder, as far as earnings, I believe this is guidance pre-earnings, earnings in a few days, and it just looks like a relatively decent gap. I'm just gonna be watching it more or less for a day trading opportunity. I don't necessarily think anything specific about long term, even though it looks a little bearish to me. Got some pretty interesting distribution patterns on like a weekly chart. But yeah, for my day traders or short-term swing traders, today's gap is a little bearish, so I will be watching it with a little bit of a bearish perspective. If it doesn't roll over, So I'm gonna be watching it, on the 5-minute chart. Give the market 30 minutes or so to digest what Ryder's gonna do. And then New Skin Enterprises, which was the big thing. You remember that, Brianna? Like a year, 2 years, 3 years ago,
Yeah.
it was the thing. Like
Oh
everybody was
yeah.
always talking about it. At least just the company, they just all wanted to buy it.
Mhm.
The gap that just occurred, 2-3 days ago, massively bearish in my opinion, like insanely bearish. So the fact that we're gapping down below yesterday and Friday's low, I'm a little bearish on New Skin Enterprises for a swing trade level and a day trade level today as well. So it'll be interesting to see how those play out. But those are really the main things on my radar today, other than the ones that we mentioned as well, and just kind of watching and see how things play out. But it's going to be an interesting earnings season, that is for sure. It's going to be really, really good to see what plays out.
Yeah, absolutely. And I love that you mentioned that too. We've had some people be like, this earnings season, watch out for guidance. We got just a couple minutes left for you. What's some of advice for our traders and investors to keep their eyes out for this earnings season?
That's a very good question. For me, my thing that educate longer term investors, because usually I think there's two types of people who should really focus on earnings: are long term traders or short term traders. If you're like a medium term trader, earnings aren't necessarily going to matter to you because you may or may not get in and get out a lot. I truly think with earnings and a longer term investment, you should understand options to some level and to some degree, because I
Ah.
think Nick was talking about open interest, how it does not affect the stock price. I'm so happy he said that. Has no effect, no bearing at all, but it gives us an idea of what direction the stock could go. And if you can understand options, you can protect yourself in case guidance is lowered and then earnings gets, smacked and you get punched in the face. You could have a put option or a collar, a covered call, and you could protect yourself over earnings, because it only takes that one gap or that one, guidance release that's really negative to just totally spoil your day, week, month, year, quarter, century. If it's depending on if this was the wrong stock. So that's usually for my longer term investors. I'm just saying, learn options, learn how to protect yourself over earnings if you have a sizable position in any one stock. And for my shorter term traders, understand the sentiment of earnings, the gap. The gap is going to be trapping people. It's going to be scaring people. People are going to be reacting to these numbers, and they may not react emotion. Well, they're going to react emotionally. They're not going to react logically. And so if you can understand how they're feeling and put yourself in their situation, be empathetic, you can make a little bit of short-term money just understanding the chart behind it. So that's, I guess, really the only way I play options. I play them from, longer-term perspective or shorter-term perspective.
Great advice from Jerremy Newsome. He's the CEO of reallifetrading.com. Jerremy, thank you so much for joining us this morning. We really appreciate your outlook, and we'll bring you back on again soon.
Yeah, you got it, Brian. Have a great day and enjoy the rest of your week.
You do the same.